Hi everyone. In this video, what I want to do is to demonstrate to newer traders, or for anyone who is struggling to achieve consistency. Maybe you've been dabbling with trading for, I don't know, 6 months, 18 months, whatever, and you're struggling to achieve consistency. So what I want to demonstrate to you, and this is really about, I guess, proof of concept, and for those of you who are always wondering, is it actually possible to make money trading the financial markets? Then maybe you see someone else do it, and then you're like, well, maybe they can do it, but does that mean I can do it? And so the idea is, yes, it is completely a learnable skill. And so the purpose of this video is really to demonstrate to you how professional traders are able to identify where a trade is likely to occur in the future. So I can have stuff on my watch list that can sit on my watch list for 2-3 weeks before the trade that I'm waiting for actually sets up. And it's the same idea as kind of if you're playing baseball, you're playing a sport, somebody throws the ball, there's a point at which you realize you have to time it so that you can connect the ball. The ball has to be at a certain place for that opportunity to, I guess, effectively reveal itself, or not reveal itself, but become ripe. And so the one that I'm going to demonstrate here, if you go back through my LinkedIn history, you will see that I posted a still image talking about Pound Aussie. All right, so that was a couple of weeks ago. Actually, I'm going to go look at it, look for it now. Okay, so on my LinkedIn page, 4 days ago, so if today is 28th of July, this would put us around last week sometime, I was talking about this. Pound Aussie appears to be on the verge of changing trend, and so looking at it, posting it there. So what I did was I drew my... In trading, there are, in certain situations, there's a high probability of the market doing one thing, probably. In other situations, very common for the market to have 2 or 3 potential ways of playing out. And so what I did here was I drew on the chart one of the ways in which I think this is likely to play out so that I can direct your attention to where I'm likely to take my first trade to the upside. So in short, Pound Aussie is demonstrating that it is slowing down. I'll show this on the chart. It also looks as though it's about to change direction, and I'm looking for it to start a new uptrend, and then I'm looking to take the trade and go long. If the trade sets up at the time, this is what I'm anticipating, because I've seen it happen enough. So it's not just an idea out of nowhere. I've seen it happen often enough. This is what I'm looking for. And so I believe there may be opportunities there. Why it's going to do that doesn't matter. I'm a technical analyst trader. I've seen this happen in all markets, happen a lot. Why it wants to do it is actually not important. So if you feel that you have to have meaning as to why this is going to happen, trading is not a religion. We don't need meaning. We don't need purpose. We really just need to recognize that the market is going to go in a certain direction, and if there's a way in which we can piggyback on that move and benefit from it. So again, there's no reason, we don't need a reason why, I just need to be able to identify the setup. So that's kind of the setup, and so that's really what I'm looking for. If I go back to the charts now and have a look at it, let me take you through the reasoning. If I go through to the weekly, all right, the market has taken a long run down and has, as it's happened, has now interacted or collided with, let's call it, a level of support and resistance. Okay, so I'm going to go back here. You can see some levels here, so I'm just going to connect with those and then bring them down. So it's somewhere around this area, but there is also another level here. So there's actually 2 distinct levels there. This would be 17,700 and another one up there. So there's actually quite a bit in terms of support. That's really beautiful. And in fact, that's going to be relevant to what we have a look at the moment. Okay, cool. So I'm just roughly drawing those in so that you can see those. It did a long move down without much of a retracement. On the way up, you can see it did a move up, extension, retracement, breathing out, breathing in, breathing out, breathing in. The market has to do this. There's energy required. You can't just have it all be one-sided. Buyers and sellers, bulls and bears, need to get in and out of the market. There are lots of market participants. So it did it by comparison. Very long move down, overextended, at least a lot of energy expended to move it here, and then it hits these levels of support, and then it's taking a bit of a reaction. So we now have a swing low. Look at the price action behavior here. A nice little bullish candle here, followed through by the next week's candle, and we can see that this has happened in the past. So then The question is, well, where is the potential for it to go back up to? And so I'll draw that in as well. So let's go through and have a look at what are likely to be significant levels above this. So I start by just placing a level and then kind of seeing whereabouts it is. I like to put it near a round number. So I'll tell you what I'm going to do for that lucky person. I'm going to put it around 18,500. That's not bad. I think that's a minimum requirement. I've done this with oil in the past as well. And so if you go back far enough, you'll see how I identified levels that if oil started heading up, these were the levels it was going to encounter. And so when you look at videos more recently, I'm still referring to those levels. So it's heading up to these levels here. That's, I think, is a fair and reasonable and rational expectation. If it goes higher, so be it. There's a nice level of support and resistance, and this level is quite significant. Why is this level more significant? Well, the market has actually tested it from above as well as from below, and therefore it's quite significant. So that could also be the case. Not only that, but if you're familiar with Fibonacci levels, you're likely to find that's probably a Fibonacci level. You know what the hell, let's do it now. If you're interested, let's see how far this actually goes. Let's see how far the rabbit hole goes. So yes, we could potentially go up to that, but I'm looking for the average mean, and I think that's a pretty good place to do it. So let's take that. Let's see if there are any Fibonacci levels that that relay over that. So we'll kind of just take it like this and see if anything matches. All right. So we can see the 382 is there. So again, that becomes, this would be a 50% retracement, and a 382 I think is a more minimum, almost a minimum healthy retracement. So I think at this point what that tells me is that these levels here are very reasonable. Right, you can go a little bit closer on other fib levels, but I'm going to include that. That just tells me that it's not ridiculous if the market did decide to come all the way to here. So if I aim for this as my first take profit, then I should really be on the safe side of things. Cool. Going down to the daily, I want to show you what divergence looks like in price action. So I use a couple of tools here for divergence, which really means, which is basically, it's really cool. If the chart is price over time, then these instruments, forget about the mathematics, they are speed over time. And so basically, if the market is moving at a constant rate, they will be matching that to a degree. If the market is starting to slow down, our eyes as newer traders might not pick it up, but as more experienced traders, we start to notice that the angle of price action has changed. And so here we start to see that these have actually started to trend higher, especially obvious on the lower indicator here. And we can see that although price is heading down, we can see price actually heading up here, and so we get that divergence. But you can actually see it with your eyes. Over time, you can start to see here how price has been angling down quite aggressively and has started to put on the brakes, shallower and shallower lows, and then eventually the price action becomes more bullish. So on the way down in a strong downtrend, you have very bearish price action. Big red candles, rejection candles, rejecting the highs. The sellers are very much in control. And then as it comes down, you start to see more and more green candles coming in. You start to see more and more rejection from underneath. So in other words, price starts to push back. And so you can see the angle of it starts to change. The brakes come on. And then that's how we get a change in trend. And so that's what I've done here. In fact, I was looking at it here. Anticipating a change in trend there. And I thought that was the confirmed change in trend. And this happens often enough. Price did another move down and has now definitely confirmed it's going to change in trend. It's broken these highs here. So this downtrend is done. This is now the moment, and that'll happen a lot on say on the equities markets or stocks. You'll see them go up, they start to stall, they start to encounter resistance, then they start to fall a bit, and then they do another kind of almost like a death rattle. They do another move to the upside, create a fresh high, and then that's it. There's no more buyers anymore. They're out. Maybe it's like a pump and dump. Who knows? Look that up, by the way, if you're not familiar with that. Right, so here we go. So that's the idea. So I'm anticipating a change in trend. I've drawn the levels. I think that we have realistically a chance to here, perhaps to there, and potentially even further. Okay, based on the Fibonacci retracement levels. So what am I going to do? How am I going to take this approach? All the time that I've spent the first 9 minutes of this video is taking you through where the trade idea came from, why I want to buy, okay, and where those levels are. So now I'm going to go down to the 4 hourly. The 4 hourly is the next go-to after the daily. And you can see here we've got an uptrend. We've already got a beautiful uptrend. You can see today, price, a really nice, solid, bullish green bar pushing through that level, breaking these previous highs. You can see it starts to look a little bit more crisp here. And so I've drawn my plan. Okay, that's kind of my plan. Now, It could be a lot lower. I could find price goes up, comes down, and I take the shot here, and then I head up here. So I'm doing this because when the moment arrives, I'm going to take the trade. There's a couple of different ways in which this could play out. This could play out by just simply hitting straight up. It's so hungry to get up, it literally just goes. If that is the case, I will then look for entries on the lower time frame, 1 hour, 2 hour, 30 minutes. At the same time, should price come through and down on the 4 hour or on the daily, I'll be looking for nice bullish candles to test this level of resistance as support, and then I'll be looking for an entry above on my way up. I'll be certainly taking profit at 1-to-1. I'll be taking profit ahead of this level in anticipation that that's maybe as far as it's going to go. And that is my trade plan. So that's my goal. That's what I'm expecting. Should price play out in that way, does it mean I'm right about that future outcome? No, it's not a guarantee. Nothing is guaranteed. Nothing in life is guaranteed. Case in point, Trump is convinced he's got the election in the bag. Might not be the case. At the same time, the Democrats think they've got the election in the bag. Might not be the case. So nothing is guaranteed. The point is to have a plan, and to, if it does actually play out as in some variation of that plan, that I have a plan to take money out the market and protect my existing capital as I take it out. So that's really what it is. I've got an idea of what I think the market's going to do, and I want to do it. And sometimes it'll go exactly according to plan, and sometimes it won't. So it's kind of a bit like a heist movie. There might be a twist at the end. So there we go. I'm looking for price to hit up and then start to pull back. I'll be looking for a nice bullish candle, and then I'll take profit as it goes, and I'll potentially trail my stop and take profit at the same time. So in other words, I'm trapping price from underneath with a stop loss and taking profit by the time I get out the trade. And that's it. So that's the trade idea. I'm going to wrap the video up here. I wanted to show this to you because the opportunity for me to get into that could be anywhere in the next 2 to 10 days. It could be in the next week. It could be this week. It could be next week. It could be the week after, depending on how it happens. I might even get a shorter term trade here, then have price come back, then get a daily setup and take it again. But I want to update this until we get there, and if it plays out in any way like this, it'll be somewhere around August in the next 10 days, give or take, next 2 weeks. So let's see how it goes. If it works out well, then it's a great example of planning a trade and then trading your plan, as they say, and also showing you that something can be sitting on my watch list and the opportunity only shows up later. So you don't always have to be going through the charts going, there's got to be a setup now that I have to take it now. There can be stuff that you follow and plan on later on. There we go. So let's see how this ultimately unfolds.